Hello, this is Richard Pawson for the Pawson Report, available at ag-financial.com and also in affiliation with IMTUSreports.com. I want to talk about what's going on in the corn market. Yesterday we had a USDA report that actually raised corn acres when the trade was guessing a sizable cut in acres due to the poor weather conditions and delayed planting. They also showed the supply of corn still tighter, but the surprise over the acres caused another great down day for prices of corn. And I'm beginning to think we've approached something that's just too low, too extreme, and all this bearish news is rapidly turning into a bunch of nonsense. So this discussion is about a possible analog of prices that's run from 1988 to 1990. And we're now in 1989 as 2013. So I'm wondering, will that analog continue? If it does, we're set for higher prices for the rest of this year and the next year. But let's first look at this chart of crop condition for corn. This comes out of the USDA. And this is 1988 drought, and the conditions slammed down. We had a poor crop. And notice in 2012, conditions slammed down. We had a very poor crop. Notice in 1989, the crop rebounded and was supposedly an excellent crop with this condition, or thereabouts. And so far, 2013, this condition's come up. Now you have to be cautious. Condition is normally higher right at the start of the growing season and then declines for the rest of the year. So it's more of a debate of how much does it decline. So it is possible of dialing in too high a yield too soon for the growing season. But notice the similarities here. Now let's look at a chart of U.S. corn yield. And if we look at 1989 or 88, big drop in yield, weather problem, crop problem. 1989, a big rebound in yield. And then a little bit more in 1990 before another crop problem, which was actually more or less along the lines of a wet condition, I believe. Now this is a line chart of U.S. corn production. And we can see the collapse going into 1988 for the crop problem, the sharp rebound for 1989, which I'm saying is perhaps 2013, and a little higher going into 1990. But notice we didn't fully recover. Now, notice this. This is the high for 1988, bull market drought. Then they pulled it back, long tail, into a 1989 bottom. And I think it bottomed to August. I've been saying July, but it was off the mark. But that some of that was a rollover. So I'm not convinced it went all that much lower. I think most of the decline, in other words, I think the bottom was actually near June and we just went a little bit lower in July, August. But eventually it did rebound and rallied all the way into 1990. That's fascinating. The market bottomed before we ever harvested that improving crop, that recovery crop, compared to the 88 collapse, or the drought impact. Just interesting that prices actually went higher as we produced more corn. So, this chart is a monthly chart of spot corn futures, and notice how we had the 1988 drought, spiked corn up, topped it in July. In 2012, the market topped out in August, I believe. Notice how the market came down, struggling at times, sideways at times, and then finally just dropped off in the bottom in August 1989. If 2013 is 1989, we should anticipate a bottom now till August. Now, as we overlay our cyclical model forecast, we're saying the bottom's due right here, right now. This report may have even created that bottom. But again, with this analog, it could be later, but you got to be cautious. Analogs, they really aren't used to pick the same time during a year as a previous year. You're really just interested in a pattern. They can bottom at, I would say 90% of the time they bottom and top at different times of the year when you're comparing year to year. Okay, so it's really not meant for that exact calendar date timing. Not at all. That might only occur about 10% of the time. But notice how price rallied into October, rallied into harvest, moved sideways to year end, and then had a nice big move all the way into summer, even though we produced more corn. Now here are some statistics. 1989, production was up 52% compared to 88. Yield was up 37%. Yield only went up 1.9% by 1990, and production went up about another 5.3%. 1988, climate-wise, was similar to what we saw for 2012. 1989 so far is rather similar. Things were turning cool and wet spring. Then the summer was a little bit warmer and not quite as much rain, but it was still a recovery. And then rain still recovered as well. In fact, I'm looking at the numbers. Actually, rain was up pretty good for 1989, even during the summer as well as for spring. But the thing is, we didn't have this glorious recovery either. It was a big recovery, but it wasn't necessarily a fantastic crop. But prices went higher anyways. Didn't matter even if it was a record high production crop. Prices seemed to want to go higher. So now let's look at some price statistics. Corn rallied from 1989 low to the 1990 high, 39%. If we put that with yesterday's corn price, we would have $7.60 corn, whereas yesterday we had $5.47. For now into harvest, corn would be up 13.5%. It would rally from 547 to 620 by, say, October. And the interesting thing is we do have a model script calling for a run up to October. By harvest, or by the end of the year, or I guess it was the low going into December of 1989, corn had backed off about 6%. If we convert that to today's prices, corn would be at 582 on the December futures by sometime December. And here they are. They're lower than 547. I think they're down to 510. So what this is forecasting is there's a good chance the low of the year occurs now, or at least sometime ahead of harvest, that every farmer or consumers could be paying more by harvest time, and then even a little more by year end, and then quite a bit more going into 2014 that would relate to 1990. Very interesting scenario. Will it work? I don't know. Analogs come and go, and it's hard. I don't think anyone can predict when they decide to just not work anymore. But right at the moment, I think there's a good chance we're seeing the lows for 2013 for corn prices, and we have an analog trade scenario going on here. And I think we see a scenario with weather, and I think we see a similar scenario with production yield. I've been saying for some time now, yield will not recover to a record new high this year, but it will recover from last year's drought. And what I'm saying is we have found a period in time and a period in history when a market can say, I don't care, the production's going higher, price is going to go higher anyways. Thank you.